trade executions, rotation review, and Nasdaq 100 context. Opening. This report reviews the latest trade execution dashboard, the portfolio rotations across May, June and July 2026, and the broader Nasdaq 100 market context over the same period. Dashboard overview. The combined dashboard points to a strong live trading record alongside a favorable model validation result. On the live side, trade executions shows an annual growth rate since October 2022 of approximately 24.8%, and net asset value growth of roughly 101.5%. The chart also indicates a sharp acceleration in gains into July 2026, with the gain and loss line moving higher while positive trade contributions dominate the latest period. The Zorro Backtest versus live performance dashboard suggests that the current rule set would have outperformed the realized live path. The simulated path reports cumulative return of approximately 154.3% versus 81.7% live. Annualized return is 28.3% versus 19.2%. Maximum drawdown is 3.8% versus 9.6% live. The Sharpe ratio is 1.83 versus 1.27. The message is that the live strategy is already strong, while the updated model may be stronger still. Rotation review across the past 3 months. The portfolio history shows a clear momentum-led rotation process rather than static buy and hold positioning. Across May, June and July 2026, the portfolio remained anchored in a high-conviction semiconductor core. Applied Materials, Advanced Micro Devices, Intel, KLA Corporation, Lam Research, Marvell Technology, Micron Technology and Western Digital were either consistently held or quickly reselected after rebalance. This persistence indicates that semiconductors and related infrastructure remained the dominant leadership cluster. The biggest shift occurred from May to June. May still included a broader mix of names such as Baker Hughes, Electronic Arts, Diamondback Energy, Alphabet, Netflix, Old Dominion Freight Line, Palantir, Ross Stores, and Warner Bros. Discovery. By June, many of these had been removed and replaced by AppLovin, Cadence Design Systems, CrowdStrike, Cisco Systems, Datadog, Fortinet, Palo Alto Networks, Qualcomm, and Atlassian. That was a meaningful move away from mixed sector exposure and toward a tighter growth technology, cybersecurity and software posture. June to July rebalancing. The June to July rebalance was more evolutionary than disruptive. 16 names were retained, including the major semiconductor and cybersecurity exposures. Only 4 names were removed: AppLovin, Cadence Design Systems, Qualcomm, and Atlassian. 4 names were added: Axon Enterprise, Microchip Technology, Monster Beverage, and Texas Instruments. This implies that by July the model was not abandoning its core thesis, it was refining exposure within it. The July additions are revealing. Microchip Technology and Texas Instruments kept the semiconductor emphasis intact, while Axon Enterprise and Monster Beverage introduced selective diversification into quality growth and defensiveness. That suggests the model responded to changing relative strength by keeping its main semiconductor bias while adding some breadth and resilience. Nasdaq 100 context over the same period. The dominant Nasdaq 100 themes over the 3-month period were continued artificial intelligence and semiconductor leadership, strong capital expenditure support for chip and infrastructure companies, and then a more volatile pullback in late June and early July as valuations became stretched and traders locked in gains. Cybersecurity and selected cloud and software names also remained important secondary leadership groups. The portfolio rotations align closely with that backdrop. June's shift into semiconductors, cybersecurity and software fits a market that was still rewarding growth leadership. July's retention of most semiconductor names, combined with the removal of some higher beta software positions and the addition of Texas Instruments, Microchip Technology, Axon Enterprise, and Monster Beverage, fits a market becoming more selective after a strong run. Interpretation. My interpretation is that the strategy has been behaving coherently. The live dashboard confirms that the realized portfolio has continued compounding strongly. The Zorro review suggests that the current rule set may improve return quality further, especially through shallower drawdowns and stronger risk-adjusted performance. The 3-month rebalance history supports that conclusion because the model did not rotate randomly. It concentrated into the market's strongest trend, semiconductors and adjacent technology leadership. Overall, the combination of strong live execution, supportive backtest evidence and disciplined recent rebalancing suggests that the algorithm is functioning as intended. The main caution is that the strongest apparent improvement still comes from simulation, so future live validation remains decisive. Current example holdings. Current example holdings include Applied Materials, Palo Alto Networks, KLA Corporation, NVIDIA, and Lam Research. These are examples only and are not recommendations. Positions may change as the model updates. Further information. Additional information on the strategy, methodology and supporting market analysis is available through Backseat Trader. Previous audio-visual updates are available in the Strategy Commentary archive and on the Backseat Trader YouTube channel. Risk warning. Past performance is not indicative of future results. Simulated performance is not a guarantee of future performance. Investing involves risk, including the possible loss of capital.